Good day everyone. Our topic for today is all about adjusting entries. So what is adjusting entries? Adjusting entries are used to adjust companies' financial statements and bring them into compliance with relevant accounting standards. So adjusting entries, into my own understanding, it is to adjust the company's financial statements and they must also comply the accounting standards. There are 6 types of adjusting entries. The first type is the accrual. Under the accrual is the accrued income and accrued expenses. The second one is the deferrals. And under the deferrals is the pre-collection of income and the prepayment of expenses. And the third one is the provision for depreciation of property and equipment or fixed asset. The fourth type of adjusting entry is the provision for estimated uncollectible accounts or the bad debts. The fifth one is adjustment on inventories. This is typical in merchandising and manufacturing concerns. The last one is the correction of erroneous journal entries. First, let's study the accruals. In accounting, the term accrual means to recognize revenue or income earned regardless of when it is collected and to record expense incurred whether paid or not. So, in my own understanding, accrual means if a transaction is occurred, it must be recorded. It is an expense already incurred but not yet paid, or a revenue earned but uncollected. Under the accruals is the accrued income. It is an income that is already earned but not yet collected when the accounting period ends. The purpose of the adjusting entry is to record the income earned and recognize the corresponding asset account, and it is receivable. Example of accrued income can include wages earned but not yet paid, rent earned but not yet paid, and interest earned on a bond but not yet received. So akong own understanding ani niya kay ang accrued income kay kanang imo na siyang gitrabahoan tapos wala pa lang kakadawat sa sweldo kay wala pa man ang ting sweldo, so mo na siya matawag ang accrued income. And the second one that is under the accruals is the accrued expenses. It is an expense that is already incurred but not yet paid when the accounting period ends. The purpose of the adjusting entry is to record the expenses incurred and recognize the corresponding liability account, and it is payable. The examples of accrued expenses is the loan interest, wage expenses, government taxes, utility expenses, rent expense, computer equipment. So ang kalahian sa accrued expenses sa income kay ang expenses kay ikaw mo'y ang mubayad kay sample ang katong rent expense. So di ba ikaw may nagrenta, syempre ikaw jud mubayad. So mo na siya sa accrued expenses. The second type of adjusting entries is the deferrals. Deferrals are a type of adjusting entry in a company's general ledger that delays the recognition of a transaction in a company's accounting record until a future fiscal period or periods. Deferrals are used to put off revenue, meaning the amount to be collected, and expenses or amount to be paid. So, ang kalahian ani niya sa accruals is ang deferrals is the postponement of the recognition of an expense already paid but not yet incurred, or a revenue already collected but not yet paid. So ang mura na siya bali sa accruals. Ang deferrals kay murag ni bayad na siya daan before pa ka ni buhat sa imong service. There are 2 types under the deferrals. The first one is the pre-collected income. It is an income that is already collected but not yet earned. This is exactly the opposite of accrued income. There are 2 methods or approaches that can be used in recording the pre-collections. So, ang pre-collected income in my own understanding is mabasahan man ninyo bali siya sa accrued income. So, di ba ang accrued income kay trabaho una bago bayad. Tapos ang pre-collected income kay bayaran ka una, so advance pay ni siya before pa ka makatrabaho. So the 2 methods of the pre-collected income is the income method and the liability method. So, ang income method is credited upon collection or receipt of cash. This method is called nominal approach because an income is an income statement account and income statement account are also called nominal accounts. So, ang nominal accounts di ay kay kuan siya. It's an account that you close at the end of each accounting period. So, muna siyang, ang tawagan niya is ang temporary account. Temporary or nominal accounts includes revenue, expenses, and gains, and loss accounts. With nominal accounts, debit the account if your business has an expense or loss. The second method is the liability method. A liability account is credited upon collection or receipt of cash. This method is also called real approach because a liability is a balance sheet account and a balance sheet accounts are also called real accounts. So, ang real accounts ay also include contra assets, liability, and equity accounts. With a real account, when something comes into your business, it's an asset. Debit the account. Credit the account when something goes out of your business. A real account can be an asset account, a liability account, or an equity account. So the second type of the deferrals is the prepayment of expenses. It is a prepaid expense. This is an expense that is already paid but not incurred. This is exactly the opposite of accrued expense. And there are two methods or approaches that can be used in recording prepayment. So sa kung masabtan is ang prepaid expense kay bali siya sa accrued expense. So imo na siyang gibayran daan bago pa nimo gigamit. So kung mag-rent ka, murag imo na siyang gibayran nimo daan bago pa nimo gigamit ang kuan ang room or ang balay. The two methods under the prepayment of expenses is the expense method and asset method. The expense method. Under this method or approach, an expense account is debited upon payment of a prepaid expense. This method is also called nominal approach because an expense is an income statement account and income statement accounts are also called nominal accounts. The second one is the asset method. An asset account is debited upon payment of the prepaid expense. This method is also called real approach because an asset is a balance sheet account and a balance sheet account are also called real accounts. The third type of the adjusting entry is the property and equipment and the related depreciation. Property and equipment as defined by Philippine Accounting Standards or the PAS number 16 are tangible assets which are held by an enterprise for use in the production of supply of goods and services for rental to others, or for administrational purposes and are expected to be used during more than 1 year period. These include land, buildings, machineries, motor vehicles, furniture and fixtures, equipment and improvement to leased facilities, which are called depreciable assets, except land because it is expected to be useful to the business enterprise for an indefinite period of time. Before we discuss depreciation accounting, let us study on how property and equipment is valued and classified. So, ang tangible asset di ay is an asset that has physical substance. Example, ang inventory, ang building, ang manufacturing equipment, ang machinery, and office furniture. Muna siya ang mga gamit para makaproduce og supply og goods. The land. The account includes purchase price, agent's commission, attorney's fees, and other expenses incurred in obtaining the clean title. Payment to squatters and tenants occupying the land includes relocation and reconstruction of property belonging to others in order to acquire possession. Cost of demolition of old structures, salvages from disposal of the old building is considered as the reduction of the land account. Clearing and grading all the expenses that should have been paid by the seller but assumed by the buyer. So ang sa land ay mo ni siya ang mga dapat nimong mga bayiran. So ang kuan kay para makakuha ka og clean title sa yuta, such as ang presyo sa land, ang commission sa mga agent, ang fee sa attorney, ang ang pagguba sa old building kung naaman, and ang pag-relocate sa mga tao sa kana nga lugar kung naa may nagpuyo dira. More siya gi-calculate na ni daan sa seller nga tanan mga buhatonon para makuha nimo ang clean title sa land. Nya gi-assume na siya nga mapalit siya sa buyer. The building. The account includes acquisition cost, renovation or remodeling cost incurred if the building is already existing. If the building is going to be constructed, the actual cost of the construction, which includes salaries of construction worker, building permits, architect's fees, included also are excavation cost and cost of temporary structures used as office and stockroom. Mo ni ang account nga pwede nimo mabayaran kung sa building. It is ang renovation or remodeling kung naa na ang building. Nya kung i-construct pa lang ang building, kay ang dapat nimo mga bayaran is ang sa construction worker, ang building permits, ang fee sa architect. Nya also ani included pud ang kanang excavation cost. Ang excavation cost included na ni ang ang excavation cost and cost of temporary structure used as office and stock room. So ang ang mga temporary siya nga building para butanganan sa mga stock o kanang temporary sad siya nga office. And also apil po ng excavation cost, ang kanang cost siya sa pag-excavation. So ang ikatulo is ang promissory note. A promissory note is an unconditional promise in writing made by one person to another, signed by the maker, engaging to pay to order or to bearer a sum certain in money on demand or to fix determinable future time. So ang promissory note di ay kay mo ni siyang unconditional promise. So mo siya promise nga mobayad ka, pero ang kani nga promise kay isuwat ni siya pareha nang kanang sample bayad sa tuition. Ya di pa kakabayad, mo na siya pwede na siya himuan og promissory note nga mobayad ka soon, or kanang sa kung kung nana kay kwarta mo na siya. Dapat na nimo siyang bahaton in the future time. So ang sunod is ang land improvements. The account includes driveways, sidewalks, parking lots, water drainage system, canals and culverts, fencing and landscapes. Property and equipment are generally recorded at cost less allowance for depreciation. Cost is measured at the cash price equivalent. This is presented in the balance sheet as non-current asset. The portion of the property and equipment that should be allocated over the number of years and chargeable against expenses during the period. This is called depreciation expense. The reason why property and equipment is subject to depreciation is because this helps in generating revenue in conduct of its operation. The revenue that it generates should be matched against depreciation expense incurred during the period. So as ako nasabtan is kanang ang cost de ani nga sample ang driveway, ang cost de ani niya kay depende siya sa kadak-on sa sa driveway. So kung dako ang driveway, syempre dako sa jud kag mabayaran. There are two types or two kinds of depreciation. The first is the physical depreciation, and the second one is the functional or economic depreciation. The physical depreciation is the result of the ultimate retirement of the property or termination of the service of the best asset because of the wear and tear due to frequent use, passage of time due to non-use, action of element such as wind, sunshine, rain or dust, and others. The functional or economic depreciation arises from obsolescence or inadequacy of the asset to perform efficiently. The asset is said to be obsolete when there are already new models or inventions and the business is desirous to replace the old business. For example, the production capacity of the machine is only 50,000 units, whereas the sales volume requirement is 100,000 units. The fourth one is the provision of bad debts. Bad debt is a reality for businesses that provide credit to customers, such as banks and insurance companies. Planning for this possibility by estimating and the amount of uncollectible loans is called bad debt provision and can enable companies to measure, communicate, and prepare for financial losses. The examples of bad debts is the credit card debt. Owing money on your credit card is one of the most common types of bad debt. Auto loans, buying a car might seem like a worthwhile purchase, but also loans are considered bad debts. Personal loans and payday loans. Adjustment on inventories. It is the fifth one. An inventory adjustment is an increase or decrease in a company's inventory to explain theft, broken products, loss, or other errors. Sometimes companies may see these changes during annual inventory counts or periodic accounting entries. The two main types of inventory adjustment is the quantity adjustment and the value adjustment. The quantity adjustments are used to increase or decrease the number of items in stocks. And the value adjustment is the value adjustment are used to increase the decrease the value of inventory. So ang quantity adjustment di ay ang gidaghan nun. Kung pataas ay kung mo increase ba ang stocks, ang items or mo decrease ang items. And ang value adjustment sad kay ang value sa product kung mo taas ba or mo decrease sa inventory. The last one is the correction for erroneous journal entry. It could not be avoided sometimes that errors will occur in recording transactions. How are these errors being corrected? Under the correction of erroneous journal entry is the machinery and equipment. The account includes the cost of purchase, transportation, installation, trial run, insurance, while in transit and cost incurred in the order for it to be ready to operate. So, kaning account kay mag-include ang cost sa transportation, niya ang sa pag-install sa machinery, ang pag-trial run, ang insurance while nag-transit, niya ang cost sa incurred of the order. The two parties in a promissory note is the maker and the payee. The maker is the one who signs and promises to pay at the specified amount in the instrument. It is a notes payable. So, muna siya ang ang mo promise nga mo bayad niya ang. The second one is the payee. Payee is the one to whom the promise is given and to whom the specified amount in the instrument is payable. So it is a notes receivable. So muna siya ang mudawat sa promissory note and muna siya ang makadawat sa kwarta. So that's it everyone. Thank you for watching.